Another weekly market breakdown for the currency pairs. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, this week we will be focusing once again on the US dollar. So we're going to go through the dollar index first and then look at the USD JPY, GBP, USD, Euro, USD, USDCAD, as well as USDCHF there as well. And if we look at some fundamental data for the dollar index that we can expect this week, it's going to be the advanced GDP as well as the core PCE or the price index. And then so I've had some people asking me, why do I only look at high impact news? Because for me it's important to understand what because high impact news is what it say it is. It's the news that impacts the currency the highest, or that hits it the hardest. Now, if you're not aware with what the GDP is in terms of how it's calculated, the GDP is basically calculated through both exports and imports. The total consumer spending, business investment, government spending, plus the net exports, which is total minus the total imports. So if you didn't get that the first time, you're more than happy to just go over that again as well. But the way this works with inflation, which is something we need to discuss quickly, is that when inflation, the reason why I want to see the GDP numbers is because the way this works with inflation, because we know we want higher inflation means more interest rates, means stronger dollar. Now the GDP, the GDP of any country is one of the main indicators that is used to measure but the performance of a country's economy. So it is, in simple terms, it is basically a system by which a country trade, their industry and money are basically organized by looking at the GDP. So they use the GDP as a key indicator to understand how well the country's economy is doing as well. And the way this infect inflation over time, the GDP, if it's left unchecked, a country does run the risk of morphing into hyperinflation. Most economists today will agree that a small amount of inflation, about 1% to 2% a year, is more beneficial than detrimental to the economy. And the US current inflation year over year is sitting at 1.23%, so they're still doing somewhat okay. Then we got the PCI, the core PCE, as well coming through also. Now that you've been educated on that, let's jump straight into it. Now, if you've watched the video that I made on Thursday explaining from a more fundamental perspective, and I'm going to get the pop-up to come up here somewhere just so that you can go back to that video and watch it, so that you can understand how the fundamental data behind this technical analysis is going to be a huge contributing factor there as well. Now, if I just look at the chart from a monthly perspective, I can tell you now already that the dollar is going to go and hit about 104 first, and then we can expect the dollar to go and hit 106 thereafter. We could potentially see the dollar go even further. But if we get a breakout above that, if once we get to 104, then we can see 106, then we can see 112, and then potentially see 118 thereafter. Now we're going to do a technical analysis for the dollar index first. So firstly, if we start here on the monthly time frame, firstly we can see the dollar index had broken above this very strong level of resistance, but we can also see that this is a very high liquidity area where the market had spiked previously before. But this happened in 2020. We're now sitting in 2022. Everything is a lot different compared to what it is now. Today is the 24th, so we got a couple of days left. We just have this week still. I just want to check the calendar for you guys quickly. Yes, so we got until Friday for this candle to close. A clear candle, if this daily candle does close above this level, then that will be the end of the line for the dollar index to go to the upside. Now from a weekly perspective, we can see based off last week's close, the market had broken and closed above the strong level of resistance that is now acting as support, and we can see that this is the next level that the dollar index is going to test going into next week. So there is a good buying opportunity for us to go, and that is where the dollar is going to go excuse me, in the near future there as well. And if you take this tool, you can see that is enough, that's a lot of pips that you can still catch on there as well. And now that we're on the daily time frame, now that we're on the daily time frame, now the best way that we can see over here is we can see how last week this candle had closed above this level over here. Now basically what we are going to just wait for is that pullback. Now I'm not sure if any one of you trades the dollar indexes as a standalone, because I don't. I just trade all currencies that trades against the US dollar, which is what we're going to do the breakdown for as soon as possible. Now that is the situation that we got on the dollar index. We're expecting it to increase in strength. Like I said, I will make a video, some pop-up here somewhere that I made on Thursday, that's going to show you exactly why we can see this move happening here as well. But what I want you to take a look at very quickly is what we had saw here on Thursday. We could potentially see something like this here as well. This is called a liquidity wick. So what happened was the market formed the resistance, broke above that, came to test it as support. Retail traders started buying the market from that level. We had a massive liquidity grab to the downside, literally taking out all the all the Euro USD, GBP USD, all those sellers literally got taken out of the market because they expected the market to continue up from here. We had a massive spike to the downside, and we're going to see those liquidity wicks when we go to the other currency pairs as well. So we just need to be very careful to make sure that we don't see something like this happen here as well, where the market just go meow and then start moving to the upside. If you have enough money in your account and you don't mind the drawdown after calculating your risk, then you shouldn't have a problem. Next up is we've got the USDCHF. Now we have the EURUSD over here is now currently trading at strong monthly resistance. Now this level over here acted as a strong level of support. Support got broken. All of that support's now being tested as resistance. Definitely a pullback expected before that continuation to the upside from a USDCHF perspective as well. Now if you look down on the weekly time frame, what do we see? From a weekly perspective, the market printed this massive impulse, and after an impulse you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of the impulse, and you can see how we do have a 0.38 pullback that's lining up perfectly with this previous level of resistance that got broken, that is now turned support, giving us a further indication that we can expect the market to pull back to continue slightly higher. Now if you look at the daily time frame, we can clearly see that there's a contradiction between the daily and the weekly. Now these are structures that the market had created and broken. This level over here acted as a strong level of resistance. The market broke above that and is now acting as a level of support. If you take your Fibonacci from the low to the high, we can also see how we've got the confluence of the 0.50 lining up perfectly with that previous level of resistance that is now turned support, giving us a confirmation that we can expect the market to pull back slightly lower going into next week and then start that continuation to the upside, which is the same kind of price action we saw on the dollar index there as well. Next up, we've got the USDCAD over here. Now USDCAD from a excuse me, from a monthly perspective. Now I've probably spoken about this pair so many times. The market was sitting at this level. I explained all of the reasons why we can see that move to the upside there as well. Now the USDCAD has got a high possibility for the market to go back into that massive liquidity zone that it had been testing there previously. Now because the market is currently trading above the strong level of resistance that it formed over here, or it is currently trading within that liquidity pool that we have over there, we can definitely expect this market to continue higher there as well. If you drop down on the weekly time frame, what do we see? Now from a weekly perspective, the market is currently testing and I'm not going to say rejecting. You can see how this week has been, this couple of weeks has been quite bullish there to the upside. The market had now completed this information to the neckline after an information so what happens is after the information, you expect a pullback to the neckline. Now this is the information. We had the pullback to the neckline. We can expect a pullback before the continuation to the upside for the USD CAD there as well. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, this is the pullback that we would like to see. We had a massive impulse. So after an impulse, you expect a correction. Best way to measure that correction is by taking your Fibonacci from the low to the high. Now if you look left over here, you can see the market is testing strong support that is now resistance, and this was the level of resistance that the market had broken that is now acting as support. Going into next week, we can definitely expect a pullback before that continuation to the upside. Alternatively, the market could either just go here and reject this level, or we could potentially see a deeper pullback to that level before that continuation to the upside there as well. Either way, we can definitely expect this market to continue higher there also. Now this is Euro USD that I've been speaking about earlier. Now if you look at the dollar index and that wick that I was talking about, this is exactly what had happened over here. So what happened with retail traders was, again, that they probably thought that the market was going to just start that meltdown to the downside. Instead, the market spiked to the upside, took out all of those traders, and then started melting to the downside. You can see the opposite price action on the dollar index, as I spoke about earlier. Now if you look here on the monthly time frame, we can clearly see it's as clear as daylight. The market is now trading below the strong level of support, giving us a confirmation. Definitely the market is going to hit this level that it hit before, and we could potentially maybe wipe that out as well, depending on how long it's going to take for the US dollar to re-establish the economy. Here on the weekly time frame, quite clear here, support got broken, it's testing it as resistance. The market also printed this overextended W formation, tested the left leg. If you drop down on the daily time frame, what do we see now? From a daily perspective, we can see not only are we trading below the structure, we're also trading below the structural level over here. Now this level over here acted as a level of support, got broken, and it will be acting as a level of resistance. So going into next week, as we expect the dollar index to slightly decrease in value, we can expect Euro USD to slightly increase in value and then retest and then continue to the downside. With this massive impulse, you expect a correction, and the best way to measure that correction is by taking the Fibonacci from the high to the low, and we can see that we do not have a 0.38 pullback, but if we do drag our Fibonacci lower, we can see that there as well. So we could potentially go down further or go up. Either way, we are going down on Euro USD as well. GBPUSD is next in line, and GBPUSD has been taking a lot of the punishment also, but GBPUSD, as we can see, is now trading at a strong level of support. So we can definitely expect a slight pullback because we're expecting a slight retracement on the dollar index there as well. On the weekly time frame, what do we see? Now from a weekly perspective, the market most recently aggressively broke below the strong level of support, and once support gets broken, it becomes resistance, giving us an indication that there is a possibility that we could see this deeper pullback happen going into next week, which is very less likely to happen. Now from a daily perspective, market was consolidating, finally broke out, and then the market just fell to the downside on the basis that Powell had announced a 50% basis increase in interest rate hikes coming on the 4th of May. We had this massive impulse. After an impulse, you expect a correction, and to measure that correction, you take a Fibonacci from the high to the low. We'd have a 61.8 pullback. However, the only problem is that this retracement is sitting quite deep, so we can potentially see a pullback to at least the 0.382, and then from there start monitoring the price action and see if we can start for some selling opportunities at that level. Alternatively, if all else fails, we're just going to wait for the market to continue higher until the 61.8 and then start that meltdown to the downside there as well. Either way, we have to be reactive, not predictive, and learn to adapt to the ever-changing market environment. Next up, we do have USDJPY. Now, here's no question to whether or not this market is going to hit this level over here, because I can tell you now already that this market is going to hit that level whether you like it or not. Next up, we do have weekly here. Now we can see we had this massive bull run. Now it's quite difficult to say that you want a retracement, because if you want a retracement, you would want to wait for the market pullback there, which is not going to happen anytime soon. Next up, we do have this daily consolidation that the market had created. We can see a market is stuck between support and resistance. Going into next week, we can definitely expect this market to break out and then continue to the upside, and then go and hit that 135 as as we've spoken about not too long ago. So that is the easiest way to approach this. So that is how we're going to approach the situation, guys. That is it for this week's FX weekly market breakdown. If you do know of anyone that would like to watch this video to help someone else as well, you're more than happy to share the video as well. Thank you for your time. Thank you for taking out the time out of your day to watch the video. And as always, cheers for years.